Hello, welcome back. So in this channel we have talked about Intel quite a lot, and now comes the time to talk about it again because the company had really bad earnings and it's going up and down quite a lot these days. So we're going to talk about the past problems that Intel had. We're going to talk about the potential solutions that they are inventing right now and whether the current valuation is good enough for new investors to jump aboard. So is it a good opportunity to buy? And I will also tell you why I haven't bought yet as the stock price was going down. We will discuss all these things in the video, but there's a lot of interesting things to talk about, and I have a few sources that I think you're gonna be finding interesting as the video progresses here. So Intel actually had to cut 15% of its workforce as they reported a quarterly guidance miss, and also they reported losing money. And they had to cut around 15,000 employees, as you'll see here, eliminate its fiscal fourth quarter dividend, and reduce capital expenditures. Now, the dividend is an important thing, and it's one of the core reasons why I haven't bought into Intel yet. But maybe, as the stock price is going down, it becomes a better opportunity. Now, of course, we're going to discuss all this. Now, you will see here that the earnings that the company announced here was 2 cents adjusted versus 10 cents expected. So they actually did 8 less cents than what was expected. Now you will see that the company actually had a 1.61 billion net loss, or 38 cents per share, from net income of 1.48 billion in the year before the current year. So why is it 2 cents adjusted versus a loss that they actually had? We have talked about it, and I have made a dedicated video in my channel talking about adjustments. And adjusted basically means that the company is excluding some expenditures, and they are not basically reporting it in their earnings percent here. So this is what it means. And typically companies do that when they want to exclude some expenditures, and it's a little bit of a cook, if I may say. And lots of companies do that, especially the ones that are actually losing money or they are not making money to begin with. Now, you will see that Intel's revenue declined 1% year over year, and that's not good news, especially in a hot market right now with companies like Nvidia, for instance, actually flying. But the good thing about it here with Intel is that, if they manage to turn this around, maybe they have a lot of opportunity, a lot of potential for the future. And they are working towards, turning the ship around. But it is going to be probably a tough road to take. Now, what has happened with Intel, why they are in such position right now? Now, if we go back a little bit, you will remember back in 2020, Apple actually broke a 15-year partnership with Intel on its Macs. And I actually have a Mac that was an Intel-powered Mac, basically with an Intel processor, and had lots of issues, like it would actually have the fan running all the time because it would overheat. And that was a big problem with for performance, obviously. And then Apple basically started using their M processors, which are actually significantly better than what they were doing with Intel there. So you could kind of see some issues there with Intel back in 2020 and before that. Now, more issues with Intel happened after they were reported to be selling defective 13th and 14th gen CPUs. A game publisher actually claimed, and actually this was acknowledged, as you'll see, by Intel, and they had a little bit of an issue finding the root cause, but eventually they did discover it, and they started to coming up with a software, thankfully, a fix for this. It was an issue with their voltage. Actually, it would actually send higher voltage and could potentially fry or degrade the CPU rather fast. And that was a little bit of a fiasco for Intel, and it was discussed quite a lot. And you will see here in this article that they are talking about what happened with elevated operating voltage. Kind of shows the chinks in the armor for Intel, because you really don't want these kinds of issues to arise. Kind of shows that you are a little bit of a company that hasn't really progressed too much. You are becoming potentially a little bit too monolithic. You are not really renewing your stuff, you're not really getting better, and you're having issues that you shouldn't really be having, especially amidst this competition that you're facing these days. Now, a lot of articles were talking about whether Intel stock is actually a buy after the big sell-off. And I found this one here pretty interesting from Morningstar, where their fair value estimate was set at $30 here. And they're discussing things about the stock price and AI, for instance, whether the valuation is proper right now. They do think that the stock would go lower than 30, and actually this definitely has happened already, as the stock has gone even below 20 at some point, I believe. And they have fallen behind during the AI boom, obviously, when companies like Nvidia have been doing significantly better. And it's interesting, it's worthwhile noting that the Moore law is mentioned here. And the Moore law, in case you are not aware of it, actually I have it over here. It talks about the fact that there's an observation actually that the number of transistors or an integrated circuit doubles every 2 years, or will double every 2 years, with minimal rise in cost. Very, very interesting here to realize that the market is basically getting more higher demand in the future. It's going to be getting higher demand in the future. So it's interesting to know that the whole market and the whole chips market basically is going to be growing tremendously over the future. And it's only a matter of whether Intel will be able to be a big player. It has been a huge player, but it's getting worse when compared to the competition, especially in things like graphics, for example, where Nvidia is definitely doing much better, like graphics cards, for instance. Now, yeah, as you'll see here, they're talking about Intel's valuation. We're gonna look at that with our tool, of course, just to discover more details about it, but they don't think it's looking cheap yet, and I would agree. Even at where it is right now, it may not be cheap, and again, it's something that we will establish a little bit later because things have changed with what the company is making right now. But it could be, again, an interesting investment for the future, for sure. And the fair value estimate that they calculated here was $30 here for the company. Talking about the financial strength of the company, its inability to generate free cash flow because they actually lost money and they had negative free cash flow. And all these things and the amount of debt here that they have, which is about 52 billion of debt, with while holding 21 billion of cash, is a little bit of a potential issue if they don't turn things around. But they will have quite some time to do it, that's for sure. So there is uncertainty, there is risk here, and they need to do much better in regards to technology. And this is why I had a couple of articles here talking about how Intel fell behind Nvidia in the AI chip race. Again, artificial intelligence is a big thing among these competitors here. And Intel definitely has to do much better in this one to be able to to turn this around. Now, an interesting point here from the article is the Microsoft to the rescue, sort of Intel, as they have a partnership here, a collaboration between the two tech giants for leveraging Intel's cutting-edge manufacturing technology to develop a forthcoming chip designed in-house by Microsoft. So Microsoft is going to be designing that with the help of Intel here for the implementation. Very interesting to note, and a very nice partnership for Intel to have moving forward, as they also announced new AI chips to challenge Nvidia's dominance. So they are doing things, is the important thing that you see here. The company says that chips will deliver better performance, vital for a company like Intel right now, as they have fallen behind in that aspect, that's for sure. And Intel is taking another of ASML's high tools here, high performance tools for sure, and it's important for Intel. And you will see that they began receiving the first of the massive machines, which take months to install and are expected to enable new generations of more powerful computer chips. Now, obviously, these things take time. It will take months to start working with and actually do good things with them. So even if a turnaround happens for Intel, I don't think it's going to be happening anytime soon. That's the thing, and that's an important, a key aspect of this. If you are getting into Intel, you should be expecting ups and downs, quite a lot of ups and downs. I don't anticipate that this will turn around quickly, but maybe it will turn around later. Again, this is something that we're going to talk about it a little bit with the numbers a little bit later in the video, as we're going to be examining the actual numbers. Now, Intel was also hit with a lawsuit over the 32 billion loss, as shareholders complained that the company hit problems. There has been a little bit of a cooking, like a book cooking, that has been reported for the company, but this usually results in class action lawsuits. Class action lawsuits. It's like a very, very standard thing for investors. You see that a lot with tons of companies. Usually nothing much happens out of these situations. We'll see what will happen here, but usually, in most cases, a few things actually happen with these lawsuits, unless they are actually for something really, really important. Now, I wanted to mention GE here, General Electric, because it was a sort of like similar story to what Intel is right now. You will see that GE, in case you haven't noticed, had a massive turnaround where they kept doing really, really badly, and with the introduction of a new CEO, they managed to do much, much better. And this comes to show how important a CEO is here, especially when we're talking about a potential turnaround story. Now, Pat Gelsinger from Intel, will he be able to do things the right way? It seems like he's focusing on technology, and that's good news. I think this is exactly where the company should be focusing on. And maybe that's the playbook that will eventually play for Intel as well in the future. It took a long time for GE as well, by the way. General Electric was down for many years, and the introduction again of their new CEO and the steps he took made GE boom, frankly. I think it's almost like tripled at some point its stock price or so, after going down tremendously, like an insane amount. I think it was like more than 70% down at some point. So it's worth noting that these giants, they can slumber for a while, but they could eventually turn it around. So this is why I wanted to tell you or remind you about this story, this General Electric story. Now, why I didn't buy, why I haven't bought Intel yet, even though the valuation was good. I've talked about it in the previous videos, but it's really, really important to know and consider when you're buying these kinds of companies. You need to know about this. I really, really hated the fact that the company was paying dividends. And I have talked about it in the past. You will see it here, dividends. They had to slash the dividend, as you see here, at some point. They were paying 37 cents, and now they're paying 13. So they slashed it by like 60% or so. And that is tremendous for multiple reasons. It tends to really, really drop the stock price because there is now uncertainty. People who invested for the dividends are not getting the dividends they invested for. And multiple other issues. The biggest issue, in my opinion, is that Intel right now is not like this dinosaur company, or shouldn't be, basically, this dinosaur company that is actually sending checks to investors. It's not like a Costco, for instance, where, Costco, what is Costco going to do? It's not like they're going into technology. They don't have to manufacture chips. They are selling groceries. They are selling stuff like that. And so they don't really have something to innovate around. But Intel is a whole different story. They need to keep their money. They need to keep their money in order to innovate, in order to manufacture, produce new things, and technologically evolve. This is important. And so I really, really don't want them to burn this money to investors for two reasons also. The fact that, first of all, they're getting money out of their coffers, but also the fact that this money that they are utilizing could potentially lead to their potential bankruptcy. Even if they don't have enough money, they could they would have to get some loans, and that's something that you really, really don't want to be doing when you are not making money to begin with, when your net income is negative, when you're losing money. You really, really don't want to do that. And also, very, very important as well, as an investor holding the stock right now when it's paying 2.4% in its dividends, with its dividends, what happens if the company slashes the stock which I think is actually the proper thing to do, frankly. I think the company needs to slash the stock completely, like send it to 0%, and then work on a turnaround. They really don't want to be burning capital right now. And so if that happens, which I think eventually it will happen, frankly, I don't know when, but I do think there is a possibility for it, a real possibility for this happening, then the stock price is going to go down again, more than likely. Because again, people who hold the stock for this purpose, getting the dividends, they're going to be selling out of it. And so this worries me a little bit for the company. It may not sell off because the stock is already quite low to begin with, but it really is a concern. And when you examine the metrics of the company here, like today it was down 8%, and this has been going on for a while now. The company goes up one day a lot, like 10%, 8%, then 8% down the next day. Very typical in these kinds of situations. See these kinds of moves. So one day it goes down, one day it goes up. A lot of uncertainty. It's basically traders that are buying and selling the company, playing it like cryptocurrency basically right now. It doesn't really matter if you're not a trader. But what matters is whether it's a buy. And the P ratio of the company right now is 90. And it has obviously been much better when the company was making money. But now, as the company is making much less money or even losing money, their P ratio is going to be massively hurt, and the price to free cash flow is even negative because they are losing money. So things are not looking great here with their also key metrics like revenue growth and all that, net income growth, free cash flow. It is terrible here. They haven't been doing great, and we knew that, obviously. The good thing about it is the fact that the company has a price to book which is very low. So their stock price is at the point right now, it's so low that their assets are almost close to that. And again, the dividends that they are paying, not a big fan. I want to see them slashed. And you will see here, again, using our tool, in the income statement, for instance, you can kind of see the net income of the company. It was 21 billion at some point. Now it's sitting to 1 over here. And the cash flow statement, again, you will see that the company was losing free cash flow, minus 14 billion here, which shows the problems, massive problems. The company was also spending a ton here in capital expenditures. Remember, it was a thing that we have talked about it in the past as well. 25 billion, 20 billion, 25 billion, tons of money being spent. Understandable in some ways, in many ways actually, because they really want to innovate and to do better, and they really have to technologically, and this takes money, understandably so. Now, the important thing to examine here, and the thing that I want to see, which I think is important to know regardless of whether you are thinking of buying the stock or not. Like for me, I would potentially wait to buy this one if the dividends are slashed completely. I would give it time, maybe 1 to 2 months or so after that happens, so that it stabilizes a bit, and then consider potentially buying it. Right now, I would be very careful about buying this one. And if you are thinking of buying this one, you should be expecting ups and downs, a lot of ups and downs, and potentially holding it for more than 5 years, if not close to 10 years, to see to reap like real benefits out of the company. I think it will take time, but I do think eventually the company will do better. They definitely have at least like 3 to 4 years to at least build something that's going to be respectable enough. Now, the revenue growth of the company obviously has been terrible in the past years, but let's just say that they start to turn the cogs basically and do much better than what they have been doing in the past. And all of a sudden they do 5% or 10% or 15% even. Let's see what happens then in terms of revenue growth, which they could definitely do because things have been going bad for them. And at some point, if they manage to turn this around, you could definitely see like 10% and 15% growth, especially if they cut down on the dividends and start using this money for innovation. Now, the margins of the company are obviously up and down a lot because the company has been losing money, has been making money all over the place. I will use something that is sort of like close to the 5-year average or 3-year average. I will do something like 13%, 15%, and 20%. And it could potentially be even more in some cases. Again, depends on what they will be doing in the future. And the free cash flow margin, again, we have been in the negative territory. I will use 80, 90, and 100%. And annual return of 13%, the typical one that I like to ask for. And here in calculate, you will see here that even at the current price of the stock, the company would be a buy if these metrics were to come true. And the medium ones with a revenue growth of 10%, for example, then we're sitting at 35, very, very close to what Morningstar said over there, which their estimate was about $30. That makes sense if the company manages to do better, and that's a big if. So right now, this is how I would approach the company. I would wait it. Right now, I think I would wait it out unless I want to spend some money and just forget about it completely and hope that the company is going to do well in the future. It's going to be a little bit of hopium here, but I do think that eventually they will do well. However, your money may be well spent in other companies right now, as we're talking, or at least spend just a portion of it in this one and just leave it, let it do its thing through the years. Because again, it will likely take some time. I don't expect this to go up and down a lot. And I would really, really recommend that you don't get too excited with the massive moves on this one, because you could very, very easily see a 20% increase of the company stock price, or even a 30%, and then next month it can easily be down 30% again, or 20%. This can happen, and it does happen a lot again in these kinds of situations, because remember, this is a market, and the market forces are around the traders, and the traders do that a lot. And the slightest news are getting sold and bought. Right now, you are selling and buying not the stock, but the rumors and the news. Especially in these kinds of situations where the stock price has been beaten down, you see that these kinds of ups and downs a ton. Hopefully that helped. Stay tuned. I'm gonna be making more videos as we're getting more of these tech companies right now getting more interesting, especially since today there was a massive decrease in the S&P 500. So the whole stock market actually went down quite a lot. So we may have some interesting sales here. I'm gonna be making videos about all the big tech companies and more. So again, stay tuned, and I'll see you in the next video, guys. And thanks for watching this one. See you soon. Bye bye.